Welcome back to Explain the Charts. Today, we're taking a deep dive into USDJPY, looking at the current market conditions, key news events, and how they're impacting the price action. Let's start by examining the news that's driving the market. The latest Google search results for USDJPY are highlighting a mixed sentiment, with some articles pointing to potential U.S. economic strength, while others are raising concerns about inflation and potential Fed rate cuts. The upcoming U.S. jobless claims and retail sales reports could significantly impact the U.S. interest rate outlook, potentially influencing the direction of USDJPY. These reports could provide further clues about the Fed's intentions and potentially shift the market sentiment. Overall, the news seems to be mixed, with both bullish and bearish factors at play. Now, let's turn our attention to the charts and see what they're telling us. If we look at the daily chart, we see that USDJPY has been on an upward trend in recent months, breaking above key resistance levels. This suggests a strong bullish momentum and a potential for further gains. The recent surge in USDJPY has been driven by a combination of factors, including the US dollar's strength against other major currencies, the Japanese yen's weakness, and rising US Treasury yields. However, the recent price action is showing signs of consolidation, with the pair trading within a range. This suggests that the bullish momentum may be slowing down, at least in the short term. Looking at the longer term, the daily chart is showing a strong uptrend, suggesting that the current consolidation is likely to be temporary. Zooming in on the 1-hour chart, we can see that USDJPY has been trading within a range in recent days. The pair has been testing key support and resistance levels, suggesting that the market is indecisive about the next direction. The lack of clear momentum on the 1-hour chart suggests that the market is waiting for a catalyst to break out of the range. This could be a major news event, such as the upcoming U.S. economic reports or a significant shift in market sentiment. The 1-hour chart is showing a high volume of trades in recent days, suggesting that the market is actively engaged. This heightened volatility could make it challenging to trade, but it also presents opportunities for those who can identify the right entries and exits. It's important to note that the 1-hour chart's recent consolidation is occurring within the larger uptrend observed on the daily chart. Looking at the 15-minute chart, we can see a more granular view of the price action. This time frame is revealing the short-term fluctuations in USDJPY, providing valuable insights into potential trading opportunities. The 15-minute chart is showing a lot of volatility in recent hours, with the pair moving up and down within a tight range. This volatility suggests that the market is still indecisive about the next direction, making it crucial to be cautious with trading decisions. The high volume on the 15-minute chart is further evidence of the market's active engagement, indicating the potential for quick price movements. It's crucial to utilize appropriate risk management strategies on this time frame, given the potential for rapid swings in price. We're now going to zoom in on a specific range of candles on the 15-minute chart to highlight some interesting patterns. Let's narrow down to the candles from 1696982400000 to 1696992400000. This range of candles showcases a clear example of a consolidation pattern. We can see that the pair has been trading within a tight range, with a series of small candles. The lack of clear momentum in this time frame is a classic indication of indecision in the market. This pattern could be interpreted as a potential breakout, but it's essential to wait for confirmation before entering a trade. The breakout could occur to the upside, with USDJPY moving higher, or to the downside, with the pair moving lower. We can see the high volume of trades in this range, suggesting that the market is actively engaged and the potential for a breakout is high. It's crucial to observe the candles following this consolidation to determine the direction of the breakout and identify potential entry points. Now, let's recap the key price levels we've identified in our analysis. On the daily chart, the recent resistance level has been around 149.50, and the support level has been around 148.00. These levels could act as potential support and resistance in the near future. The 1-hour chart is showing consolidation within a range, with key support around 148.50 and resistance around 149.00. On the 15-minute chart, we saw a consolidation pattern, with the pair trading within a tight range, suggesting a potential breakout in either direction. It's important to monitor these levels closely, as a break of any of these levels could trigger significant price movements. We're also keeping a close eye on the upcoming U.S. economic reports, which could act as catalysts for the market and potentially drive price action. These reports could provide further clarity on the Fed's intentions and the potential for rate cuts. If the reports are positive, we could see a further strengthening of the U.S. dollar and a surge in USDJPY. However, if the reports are negative, we could see a weakening of the U.S. dollar and a decline in USDJPY. It's crucial to remain cautious with trading decisions, as the market remains volatile and indecisive. Our analysis suggests that the potential for a breakout from the current consolidation is high. It's essential to be prepared to act quickly if a breakout occurs, but also to be aware of the risks involved. The key things to look for in the near future are the upcoming U.S. economic reports and the break of key support and resistance levels.